Hey guys, this is Simon with Trade and Perform Coaching. Before I get started, I'm replying to someone who hit me up on Twitter. This is how you get a hold of me, by the way. If you'd like to ask for a 5-day pass to the room, tradeandperform@gmail.com, and you're more than welcome to kind of hit me up and just ask for a 5-day pass. There's no pressure to join the room. It's only for traders who like to get consistent and get paid consistently. So this gentleman right here, regulator, uh, he responded to a point that I made earlier, which was I was pointing out that chasing markets in NQNES is the end of so many traders. Uh, Breakout traders, another word for broke in day trading. So he replied, prior day low breakout worked in NQ quite well with a breaking of prior value area low and weekly daily value area low. Not all breakouts are created equally, not the norm, but here, and if it's the only way to access an idea, it works just fine. So here's my response to that, right? You can see that we're up near the top of the channel, right? So in the room, we have some specific setups that we're looking for when we are trading. And I'm going to point out the key elements, and I'm going to make this very brief response, right, as to why you do not have to short all the way over here, just like you don't have to go long right over here to try to see if you got the breakout to the high of the day, right? Because his response covers two things, and none of this is a critique of him. First of all, it assumes you have the discipline to take the right breakout, right? Which means your win rate is way below the 60 to 70% win rate that our win rate floats in, right? So we're looking at three critical elements to look for a trade, right? Number one, when we take a trade, we are always taking a trade at either the bottom of the channel or the top of this channel, right? This is our TMP radar. Okay, number two, we're looking for very specific two-bar combos, right? We are looking for triangle up that gets immediately met with a bar to the downside, right? So I know you can't tell on my screen which bars are up or down, but the gray ones are down, the pink ones are up, the purple ones are down, and the other bars simply don't matter. The gray bars, you can tell from when you're watching in real time using a Renko. We're on a 24-tick Renko here, right? So what you'll see is triangle up, gets stuffed, and it's on the outer band, right? So what I'm looking for initially is a push to the downside of this. Why is this important, right? Because obviously I don't catch it. He would be right to point out you actually end up getting stopped. But even if I get stopped, prior to getting stopped, I get a 20 to 30 point rotation and NQ on that trade. That's $400 to $600 a contract, right? And if I'm scaling off my risk, my entry on this trade is approximately 15 points. I'm getting at least a 1.2 RR, if not a 1.5 RR on this trade at its max. And I can leave the trailer. If the trailer stops out, worst case scenario, I usually end up profitable on that trade anyways. Two, down very slightly if the bar sets up just perfectly, right? But now the trade comes up again. Again, I'd have to be looking for a roll to the downside, right? And I'm going to show, and I'll play it back the other way if I'd been looking for the longs, right? So here's the pink bar and the star. It's a very powerful combination. You'll notice that if you look up on top, getting those two bars to come, and this is covering from 10 a.m. all the way to 12:30, right? Getting those two bars at the apex is very, very difficult to get those two bars side by side. You just don't get it. This is the only place you get it. So this initially gives me about a 50-point roll to the downside, right? The market falls out of the channel. You'll notice that the channel has started to turn to the downside. The radar's already started to turn to the downside. Comes all the way up. Now, this is a different story. We've broken the power bar and we've gotten an impulse move to the downside. Pink bar, they get stuffed with the point of control below the pink bar. That is a high odds entry after we've cleared and gotten what I call an orthodox close underneath. Again, we're at the top of the radar, which means if I'm looking short, that's where I'm looking for the short. So that by the time I get all the way down here on this break, I am not shorting down here. So the gentleman has a correct point. If you shorted right there, you got paid, right? But why short? Why take that short? That is 100 points below or 75 points below where your two optimum trade entries are. Now, let's say you had it the other way, right? Let's look the other way. Let's say you thought we were going to break out to the upside. So we're looking for the same trades to go to the upside. So the rules remain the same in the room. The ideas remain the same in the room. So if you look, you get triangle down, star up. That's your long. If you were trying to get the break to the upside, right, before you figured out that you were stuffed, instead of buying the breakout all the way up at the high over here, you've now traveled, right? That's a high odds entry. You've now traveled from 11,883 all the way up to 11,938. Let's see if we got any other two bar combinations that would have let us get long at the bottom of the radar there, the TMP radar. So going to the bottom of the TMP radar, purple bar, star. Again, you're playing for the long breakout. So instead of going long up here, you're going long on this star bar when it closes, right? Your entry is 11,907, and your most favorable excursion is up to 11,941. By the time you figured out that that trade isn't going to break out, you've already traveled 30 points, $600 a contract, right? By the time you figured out that that trade's not going to break out, by the time you figured out that this trade's going to break to the downside, you've already traveled 50 to 100 points, and then you're getting your gravy on the trade on the side. So that's my response to this gentleman. Again, my experience, I've been coaching since retail trader since 2014, and my experience is the majority of guys and gals trying to capture this. Obviously, there's an exception. Some people capture that, but the majority of guys and gals trying to capture that end up with a boatload of stops through the course of the day, and they get pounded. That's been my overwhelming experience. This is not a critique of this gentleman. If this process works for him, he needs to stick with it 100%. But for me, wouldn't you rather be short over here or over here, have your risk off, and then enjoy the break and get the push to the downside? Same read, same idea, same concept, but you're getting the setup and the algo's leading you in, and this is telling you where the buyers are getting trapped. Anyways, that's my 2 cents. Again, if you have any questions for me, a response, I welcome them. This is how you get a hold of me. tradeandperform@gmail.com. I look forward to talking to any and all of y'all. And please, if you're a retail trader, you're struggling to get consistent, hit me up. We've had a ton of success fixing that problem. Anyways, we'll talk to you later, guys. See you soon.